My friends, what is going on? Hope your week started out awesome. Check out the new chair first and foremost, right? Wife got it for me for Father's Day. I'd been sitting on an old POS, like it was this thing in between couches, like an ottoman that like could pull up and do a chair and everything like that. And so we were like, I was fine sitting on it, but she was like, we gotta get you something else. And so anyway, it's awesome. So hope you guys had a wonderful weekend. Hope you had a wonderful Father's Day. Hope you had a wonderful Juneteenth. But now it's time to get back into action. The market is opening tomorrow morning. So before we jump into the charts, this is going to be my weekly outlook video for AMC. It's usually a little bit longer. So I apologize in advance for those of you with ADD and can't stand watching a video that's longer than 5 minutes. These are going to be a little bit longer. But before we jump into that, you guys know the deal. Nothing I say is financial advice. Everything I say is for entertainment and educational purposes only. I always want you to do what is best for you and your portfolio and your family. Don't worry about what I say. Don't worry about your favorite Twitter person or YouTuber or anything like that. Do what is best for you. I'm always going to try to give the most, realistic, honest answers I possibly can. Hopefully everybody in this is doing the same thing, even though I know that's not the case. But I'm always going to try to tell you exactly what I think is going to happen. We'll go over bullish cases. We'll go over bearish cases. But at the end of the day, don't trade anything I'm telling you to do. Trade what you feel most comfortable with. All right? If you haven't done so already, please follow me on Twitter, Colin_Gladman. Always the easiest way to keep up with everything that I'm seeing intraday, as well as you can DM me questions, everything along those lines, okay? So first things first, I want to take a look at. Let's go over here to the option chain on AMC. So going into this week, for the expiration of June the 24th, we have got a buttload of contracts at both the 13 strike and at the 15 strike, okay? And then a decent amount, everything. The option chain is very heavily loaded for calls, not surprising in a stock like AMC that retail is heavily involved with, okay? If we go over here and we look at the puts, not too much going on, definitely more calls than puts. However, a lot of puts at the $10 strike. So if we do, just like a gamma squeeze works, go headed towards the upsides, it can also work towards the downside as well, because puts are going to have to be hedged for just like calls are going to have to be. So, and that's why, stocks like this and GME and Tesla and everything like that, they're so volatile because, so many retail are involved and the option chain is massive usually. And so that can be, why you see such big swings in the price, okay? So the option chain, like I said, is definitely heavily more loaded towards calls. Futures are ripping pretty good right now. I told everybody in my Discord, typically whatever happens, not always, but typically whatever happens on Friday usually carries over into the following Monday. In this case, it's going to be Tuesday. So it's not surprising to me at all that futures are ripping after the pump that we had on Friday. Now, I'm not going to sugarcoat it, just like I never do on my channel or on my Twitter or anything like that. That pump felt very artificial to me on Friday. Okay, now could I be wrong? Yes. Am I happy to be wrong? Absolutely. I'm always more positioned for upside than downside. I did a poll earlier today on my Twitter, basically talking about it, and I told everybody in my Discord, I was like, this is funny to me because I'm actually the exact opposite. So going into this week, I'm about 60% bearish and about 40% bullish. So, going into tomorrow, seeing something that might be, kind of a opening move up before we start to push down even another slight gap up, that wouldn't surprise me at all, okay? So now jumping over here into the chart for AMC. First things first, we're going to go over here to the daily, okay? So really what I'm going to be looking at is I'm kind of looking at this trading range right here. So this is kind of what I think is probably the most important thing right now because we've obviously, other than the crazy run up to 34 for a little bit where we ran into the halt, if you take that out essentially, essentially right here, that line's not straight, and right here, is where the majority of the trading has been occurring for AMC. So this is kind of the area that I'm focusing on as far as, so anytime we come down here, we're going to be reaching some demand zones. Anytime we get above, right here, this is where we're going to be hitting some supply areas. So from a macro standpoint, this is all kind of the area that I'm going to be looking at. However, when I'm looking at it from a Fibonacci retracement standpoint, I'm kind of looking at this area right here. So this is where we're obviously in a trading range, okay? So if I take our fib from the low that we found on May the 12th and then our high where we ran up to 16, what is that? That was May 31st. Then this is kind of what I'm looking at as sort of the local range right now, okay? So these are going to be the areas and the levels that I think are the most important. As far as anything above this area is going to be starting to get into breakout territory. Anything below this area is obviously going to be in creating a new lower low territory. Now, what I posted on Twitter several times is going to be this triangle right here. Oops. So from our high at 34, this is what we're trying to get out of right here. Let me actually just delete this. We'll add that back in a second. And from our lowest low, so this is what we're looking at right here, okay? The most likely thing is going to be, obviously it's going to break. Now, which direction it's going to break, I think that's going to be dependent on kind of what the market is doing. I really do. So if we see, some bullish continuation going into tomorrow, what I'm going to be looking at, and I'm actually going to drop down here to the hourly for a second. So you can see Amy really likes those cliffhangers. It's just like what I was telling my Discord is we are pretty much at a cliffhanger, okay? So there is the potential that we could get rejected off of here, come down. Doesn't have to refuel all the way to the bottom of the range, but we could come down here, test the range one more time, maybe come back up, then slightly get rejected again, and then we start to see the breakout, then we see the test, then we start to move back up, okay? So a similar path to this makes a ton of sense. It's really how stock works. And if you followed me long enough, you know that I talk about a lot how, healthy stocks need to be kind of like lungs where we're breathing out and pulling back. So anytime you get a pullback and a retest or anything like that, that is not a bad thing. It shows a good, healthy move, okay? So what you want to be looking for, if you followed me long enough, is volume is king, okay? So on big breakouts, especially a bear trend that has lasted this long, we want to see, some decent volume whenever we start pushing up out of here. So, once again, let's pull the fib up. So once again, go from your low to your high. So, a pushback down here, my most bullish push down area would be somewhere around this $12 range back to the 618 or even the $11.95. So if we come back down into the golden pocket, start to push back up, that would be the most bullish case scenario. A more bearish case is going to be coming down here, and even testing, the bottom of the triangle, which is going to be around $11.50, or even potentially a double bottom here at the 786. That would be kind of more neutral bearish. And then, ugly kind of bearish would be, coming down here and looking for the double bottom either at the $10 and the 30-cent range or at the $9 and the 70-cent range. That would be, kind of our ugliest downside that we would want to see before it continued moving back up. But right now what we've got is we've got higher lows and we've got lower highs. So once again, that's compressing everything. And once everything gets compressed long enough, then we're going to have a breakout or a breakdown, one way or the other. So I do think we could see some potentially decent moves out of AMC this week. But what are they going to look like? So I've seen some arguments of whether or not this is a symmetrical triangle, whether it's a bearish pennant, things of that nature. If I had to place my bet, to me, this potentially is more of a bearish formation than it is a bullish one because we're coming into it, kind of from a downtrend. Somebody posted in my Discord today about how a bottom triangle works and you can break out from there, and that is definitely a possibility. But I always say, when I don't know for sure, I'm always going to tell you guys I don't know for sure, and that's kind of what I'm feeling right now. I really think there's lots of possibilities. And honestly, I don't really care which path it takes, because I'm going to be positioned for upside and downside. Kind of like I was telling my Discord, sort of running like a stranglehold, or like a strangle play, if you will. So that's kind of what I'm going to be looking for. Now, so we talked about downside targets. Now let's talk about upside targets. So, and excuse me, let's talk about one more area you can look at downside targets with. So if we come over here, we could look at more of kind of a local bottom. Now, I really don't like doing this all too much. I'm a huge, macro over micro, kind of guy. As far as looking at levels, this would be more if you were looking to make some day trades or scalps or anything along those lines. So the 382 touch is typically where you're going to see your most bullish continuation out of, and you can see we almost had a perfect 382 touch, towards the end of Friday, and then saw, a good push up, then kind of closed right at that 382. So we could come back down, and back to that $12.25 range, $11.82 range. So you really just kind of got to decide what type of trader you are and what type of plan you want to have in place, whether you're going to be looking at more micro. I would consider this more micro, or whether you'd be looking at more macro from this low to this high, or once again looking a little bit more micro, this low to this high. All right, so looking at upside targets now. So we talked about bearish. That's the not fun stuff. Let's talk about some more fun stuff. Let's talk about some upside. So upside, we could be looking at here. So upside wise, I think $15 is very reasonable for upside before maybe we get a pushback down towards a retest area. That's going to be the 618 fib extension. An incredibly bullish extension would be all the way up to $21.49. I don't see that happening. I'll explain why in just a little bit, but I don't see that happening this week. To me, a most likely scenario for this week is either going to be a pushback down to the bottom of the range and then a pushback up, maybe one more rejection, or we could come down just a little bit. So I kind of feel like we might get rejected here. Okay, once again, that's just my feeling. Happy to be wrong. The other likely scenario would be a small push up here. Then we're going to meet some resistance, around that $14 area. That makes a lot of sense. You can see the $14.30 fib extension reaches the top right here. A previous top other than the 16. That's also going to be a previous top here. So what I'm looking at is going to be here and here. We've had two rejections here. So you guys that follow AMC long enough know about how much it likes, those fourth tests. So a push up, a rejection, one more push up, break on the fourth, makes a ton of sense once again. The absolute most bullish thing that we could do out of this bad boy is, potentially push all the way up to, the $17 and the 52-cent range, then have like a 382 retracement, touching back here towards that $15 area and then pushing on up. So this really is going to kind of be a week where we got to play it as we go. Once again, this is where the critics will show up and they'll go, great, up, down, or sideways, thanks, big help. But what I'm trying to prepare you for is all the different possibilities that could be happening. And the reality is the market is so crazy and so volatile right now, just in general, that you got to be ready, for all scenarios. And it's kind of one of those, if you're ready for all the scenarios, nothing really ever surprises you or catches you off guard or makes you big mad or anything like that. If your mind is only set on what is the most bullish thing that can possibly happen, and if that doesn't happen, I'm going to be super pissed off, then in my opinion, you're not trading correctly and you're not preparing yourself correctly. Be prepared for everything. My coach always told me going into fights, when you're visualizing a fight leading up to it in training camp, he goes, I want you to visualize every single day 3 different scenarios. One, where you're just absolutely smoking your opponent. Okay, so that would be obviously the most bullish case scenario, where everything is just going your way and you're building your confidence and you are just, at any moment you can end this guy. And then another one I want you to visualize where it's super, super close, where it's 50-50. You're landing shots, they're landing shots. And it can go either way, and it's really where you're going to have to dig deep and push through that adversity. He goes, I want you to imagine you absolutely getting your butt kicked and how you're going to handle those moments, and you get rocked, and for a second you can't see or you can't hear or anything along those lines. So my coach was always, and still is, real big on being prepared for adversity in all situations. And it's really helped me out when it comes to trading. So let's go in here and look a little bit more intraday. So now I'm going to go to the 15-minute chart. And for the most part here, this is good signs. I mean, you see that overall our most bullish volume is going to be what's winning the day, if you will. So that's good. Okay? That's awesome. That's what you want to see, okay? Now I would like more volume, but right? Can never be too much volume, right? I've never looked at AMC's chart and go, man, I really wish it had less volume. Good volumes, good things, more volatility, more opportunity to make money. So, hold on one second. Let's pull up the RSI. So intraday wise, this still looks pretty good. Look at this. You saw a bounce on Friday right at the 50, right at that neutral territory. Buying pressure started coming in. That's excellent to see. I would imagine the hourly looks good. Let's go 4 hour. Looks good. Plenty of room to run. And so that means daily is going to have room to run as well. Okay, so RSI looks great. As you can see here, as the price continues upwards, making those higher lows like we talked about, you've got higher lows on the RSI. Everything looks great there. We don't have any divergences. So overall, that looks good. Normally, I would dive into a few more indicators, but let's jump over here into the cycle chart now. So there's some things that I like about how the cycle chart is playing out, and there's some things that I don't like, okay? So full disclosure, this is what I've been tracking. I think it was back in March where I originally posted this chart and what I'd be looking for. So the only thing I don't like here, I told you guys, once we had our lowest low, and then we had some, push-ups, and what I would be looking for is this move right here once we got rejected at the top of the range. So actually, let me go back just a little bit. So this blue arrow right here, so you can see when AMC, this is going to be leading to the run-up in June, it got rejected off that bear flag. And look, the exact same happened. So the little bear flag that was formed, once it got rejected, once it came up for the first time, then it got rejected again. Now, before anybody stresses out or anything along those lines, what I want you to know and understand that when it comes to cycle charts, I absolutely believe in the cycle theory. But what I don't believe is slapping bars patterns on your chart. I will use bars patterns. Yes, I've used bars patterns in the past. However, you can't just slap up a bars pattern up there and call it a day without other TA, backing it up. That's why I use, the fibs and I use the indicators and everything along those lines. I was telling my Discord just the other day, all your TA tools need to be like all the tools in the toolbox. If I need to put a nail in the wall, I need to be able to go to that toolbox and I need to be able to pull out a hammer. If I look at needing to get a screw out of the wall, if I pull that same hammer out, that hammer is useless at that moment, okay? You need to have the tool of the screwdriver in your toolbox. You need to have the fibs. So you need to be able to do it all when it comes to your TA. That way it really helps you identify all your different possibilities. So I always say when it comes to cycle stuff, nothing's going to be one for one. I think the last kind of cycle chart video I said what I would be looking for is this little J shape right here. I was looking for this little J shape, and then that kind of be the one that comes back up, and then we would get rejected off, around the $20 level or so. So that's not happening right now. We actually kind of came back down. Now, what's a possibility here? A possibility here is, none of this is enough to make me think any of this is invalid yet. But what could be happening is we could, be making a bigger J shape that comes up here. And, and this could be the move that happens this week. That would be okay with me. So nothing here is invalid as far as I'm concerned, but full disclosure, it is not looking as good as I would hope for. And the reason I think that all that is because we had a different market back here than we have right here. So the overall market, unless there's some type of big catalyst that comes out or anything along those lines, the overall market is going to be dictating the levels and the price that this happens at. Okay, so I'm going to be on heavy watch as far as the cycle chart, making sure I still feel like it's a valid thing to talk about. It has been for almost exactly 3 months now. So I'm definitely, because one little move didn't turn out exactly how I wanted it to, just like this move down here didn't turn out exactly how I wanted it to. I'm not ready to, throw it out yet, but we're going to keep it on watch. Now, let's come over here to GME. So GME is looking interesting as well. So on a more macro basis, same thing. I'm going to get that fib just a little bit more perfect. This one right here, right there. So on Friday, came up here, hit the 236, got rejected, but then once again, at the end of Friday, started pushing back up. So GME, also like AMC, is at a crossroads on what is going to happen. So if it gets a good solid break of this pennant, pushing up and getting rejected off about that 153 area before coming back down here and retesting, or even making a lower low. So both AMC and GME have some gaps that concern me, and because I wouldn't identify them necessarily as like breakaway gaps or anything like that. So GME, okay, has one right here, and it's going to be from a 125 to about 126.33. So GME has about $1.30 gap. Let me give you an arrow here. And gaps aren't necessarily bad if they're, what you would call a breakaway gap. But this gap, to me personally, is not a breakaway gap, okay? Because it's on decent volume, but it's also that volume that comes in right at the beginning of the day. I was telling my Discord, volume typically is going to make a U shape where it comes in strong at the beginning of the day, then towards the end of the day, it kind of pumps back up like that. And you kind of get that U shape when it comes to the volume. So GME looks good. It does, but, it's also got some work to do. I mean, once again, it's a really kind of 60-40. I think, pullbacks are possible, and I think upside's possible. And I know that's not giving you guys, concrete answers of what you're hoping for or anything like that. And I promise you, me, I will give you concrete answers when I feel like I've got them. And once again, that's why I play both ways. So on AMC, we'll go down here. The gaps, too, guys, are sometimes easier to see on those lower time frames. So you can see right here. AMC's gap right here, right around that $11.80. So if we don't see a really strong market and push-ups here, it wouldn't surprise me at all, whether it's Tuesday or Wednesday at some point, to come back down here and fill these gaps. You guys know how market makers work. A push-up tomorrow, getting everybody all excited, get into them calls, and then a dump, towards the end of the week to fill those gaps, I think is very likely. So I'm going to take it day at a time, step at a time. That's pretty much what I'm going to be looking at for overall when it comes to AMC and GME this week. Also, those of you that follow me a lot, you're always asking about Mullen and BBIG. I tweeted out the other day, they pretty much have 2 weeks to deliver on some pretty big promises. So I'm just kind of hanging tight on those. Last but not least, once again, as always, trade your plan, do what is best for you, and I'll try to get as many videos out this week as I possibly can. If you're interested in joining the Discord, shoot me a DM on Twitter, all that good stuff. And I hope you have a wonderful week and you make some money. And be kind. Don't be a troll. Have a great week, my friends.